Hey, Facebook, YouTube, how you doing? Look, as promised, I'm back. This is part two of these exciting products that I have for you today. Okay. Earlier, I presented the investor's cash flow product, and I was interrupted. I had a shipping that came in, so I had to shut down the podcast, the live podcast, and then promised that I would come back here and share one more product that I have available for you to look at and see how aggressive we can now be in this market and finding solutions for each one of you out there. Okay, so I know it's been a hectic year, low inventory, low interest rates, COVID-19, and all these other things that sometimes they're already there limiting us being able to purchase a home. Well, like I said, we have a product for almost every single scenario. Okay. So again, I'm going to go straight into what I need to talk about today because again, I'm very excited because these two products is going to open up a wide range of opportunities for you to purchase a home. Okay. And the first one was the investor's cash flow. Please let me know what you think about it and leave your comments and questions there so that we can come back to and assist you the best way we can. Okay. So very good. I'm going to share a screen here with one more slide, and I'm going to go straight up to where we need to be. It is raining outside. I hear some thunders going on already. So we don't know if my internet or power is going to cut out in the middle of the way. So a lot of things going on today. All right, so hopefully you can see this big orange screen in front of you. Absolutely. All right, so today, second product highlights that I want to make is the following. The 1099 income loan. Yes. So this 1099 income loan option is for self-employed borrowers who are 1099 earners, now not able to qualify for a full doc mortgage loan. So like realtors like myself, I get 1099 and I file my own taxes. So I'm usually a contractor. I don't get W-2s and pay stubs, okay? Therefore, I go through, I deduct certain expenses that I qualify for from all the income I make on my tax returns, okay? And then sometimes it affects the self-employed individual because you want to take advantage of all the benefits that you have to be a business owner. And one of them is being able to deduct most of your expenses or some of your expenses in certain different industries, right? But that usually can affect your ability to purchase a home because lenders, when they're looking at your tax returns, they're looking at your net income, not your gross income. As opposed to if you were a W-2 or a wage earner, they look at your gross income instead of your net income. So it's huge, and then it's funny because on your W-2s and pay stubs, you can clearly see there how much you pay in federal income taxes and whatnot, right? So it is a disadvantage for self-employed employed individuals to get financing when they have to use their tax returns. Okay. But not anymore, guys, not anymore. I like I said, this is these two products I presented today are amazing. 1099 income only. Okay. So again, tax write-offs makes verifying income difficult for self-employed people. This program allows you to use 1099s for the last year or the last 2 years in lieu of tax returns. Yes, let's take a look at some highlights here for you to see. So again, if you're self-employed and you couldn't qualify yet with your tax returns alone, we have now a 1099 income loan product that we can get you in the home. Yeah, as soon as 30 days, man. We've been closing deals in like 20 days, man, 20 to 30 days. I think the process that has been mostly delayed lately is the appraisal. That's it. Banks are much quicker. We're quicker. Our processors are on the ball, on the money. We can get things done really quick. So We no longer have to wait 30, 45 days on the loan side. It's mostly now the appraiser. If there's any delays and you were not lucky enough to get a good appraisal company, they're the only ones delaying things right now, to be honest with you. But anyways, there you go. So 1099 income loan. Your minimum credit score is 640, a lot like the investor's cash flow, right? So minimum score 640, up to 90% LTV. Okay, so if you were to do, if you had your W-2s and you had your pay stubs and you qualify for the debt to income ratios that are required by these products, right? So you would have been able to qualify with much less down payment. Okay, so you got the 3.5. You have the 3.5 FHA down payment program, and you have also the conventional that you can go as low as 3% down payment for first-time home buyers, and then 5% for experienced buyers out there, right? So, so this is a little bit more. You have to put a little bit more out of pocket, but look how crazy this is. It has no MI, no mortgage insurance. So you put 10%, not 20, you put 10% down, and you have no MI, no mortgage insurance. As opposed to, again, the conventional and the FHA route, you would have if you put less money down, right? For you to get away with conventional products out there, the qualified mortgage conventionals, you have to put 20% down to be able to get away from mortgage insurance, but not with this product, not with this program. Okay, so if you put 10% down, your max is 90% with score of 700 score. So if you have a 700 score, it is 10% down. With 640 is 20% down. Okay, that's very, very clear. We can go as low as 640, but then you would have to do 20% down payment. If you have 700 score or more, then you can go with 10% down, and either one you would have mortgage insurance. Okay, loans up to $3 million. We're talking about jumbo loans here, guys. Loans up to $3 million. You can qualify by just showing your 1099, a copy of your 1099. Okay, it's huge. No tax returns, no 4506 script request, like the tax scripts requests, no W-2s, no pay stubs, just your 1099. Okay, and the full income of that 1099 will be your qualifiable income. Okay, loans up to $3 million. That's a whole lot. That's a whole lot. Minimums of 150,000. So as long as 150,000 is your 80% or your 90%, okay, in these two scenarios, then you qualify. Okay, all right. So basically, you have to purchase a home that is, have a little bit more. It's priced a little higher than 150,000. Okay. Okay. No tax returns are required. Like I'm saying, no tax returns. Most recent 1 or 2 years tax 1099 plus year-to-date earnings statements allowed. So you can have your most recent 1 year 1099, and likely this will trigger us to provide a earnings statement, a year-to-date earnings statement. Okay, the 2 years likely won't request. I'll try to be as clear as possible with this later. I have to ask my lenders about this as well to clarify a little bit more, but that's what I am assuming at this point, because it says here allowed. Okay, so let's go to the next spot. Year-to-date earnings are verified from earnings statement, pay stubs, or bank statement. So in a way, you can, let's just say you are trying to show your last year's income, something changed for this year. I guess you need to have your current earnings statement to see if you are on track with your same income that you were last year. So that's probably what this is. Okay. So you have your earnings statements to show what your current earnings are, just to make sure you're on track with the last year's 1099 income. Okay. Yeah, they want to make sure that you're making the same amount of money that you were making last year. I guess that's what it is, but it's just a statement. Okay. It doesn't say here audited statement. It doesn't say here CPA letter audited by a CPA. Nothing like that. It says just an earnings statement. 1099s must be from a single employer. So if you were a contractor getting 1099 from multiple different employers contracting you for a service, then this would not qualify. So again, going back to realtors, I don't think loan officers fall into that, but mostly realtors. If you're a realtor and you're mostly 1099, which like I am, I think this will be the best qualification for you. Or you work for a single employer that doesn't, you're not on the payroll, but he gives you work all year round. Okay, and that's the only source of income you have to use that 1099. Or you pick one of the employers that give you the most income through 1099, and you use that one to qualify for whatever you qualify without income, right? Okay. So let's see here. Anything else? Borrower must be self-employed, working for the same employer for 2 years. So we do need to verify that you have been working for that employer that contracted you and are only paying you a 1099 for 2 years. So a verification of employment is going to be made. Will be sent directly to a supervisor or the owner or the branch manager or the manager of your office, and they're going to have to fill out a verification of employment. Owner occupied, second homes, and non-owner occupied. So this is crazy, guys. You can buy an investment property here as well, non-owner occupied. You can also buy your second home. Now there are rules to second home, guys. There are rules for second homes. I don't know if you guys know this, right? But second homes have to make sense. You can't be a home that is right next to yours. You can't, right? I think there is some mile limitations. I think I want to say 5 miles, and maybe don't quote me this again. It might be 5 miles or 1 mile. I can check on it for you. But I know for sure that second homes need to, in order to qualify for second homes, you need to show that there's a purpose. Why is a second home? Why is that a second home, right? And usually, if you fall in any of these buckets here, okay, let's say you're in the bucket of non-owner occupied. Interest rates are something. And then a bucket of second homes, the interest rate's a little bit better, and it falls under owner occupied, and the bucket of interest rates on that is even lower, right? So that's where this can play a trick for you, right? So if your intent is really non-occupied and you're trying to trick the bank of second home, they're going to catch you, right? So, and how they catch you is exactly that. You need to show purpose for that second home. It's a recreational area, there's a beach, a lake, or something that your kids are going to enjoy, or it's completely in a different town, or this is located next to the headquarters of the work, the business you work for. It has to have purpose, okay? And again, it can be right next to your primary. But for the most part, for those of you that have struggled being self-employed and not being able to qualify for a loan, here you are. Come on, guys. 1099 income only. That's it for owner-occupied second homes and non-owner-occupied. And all you need is either 20% down payment if you're 640, or you need a 10% down payment if you're 700 score or higher. Okay. This is also available for purchase, cash out, or rate term refinance. So again, if you are in a situation, let's just say you're in a situation where all your money is into your real estate, okay? and you found yourself where, when you first purchased your home, you were employed. You qualify for a conventional or FHA loan to purchase that home. Now that home is paid off because you worked hard enough to pay off early or during its term. But now you are in a situation where you need some cash for either additional investments or because you just want to pay down some bills. Okay, you can, but now you're self-employed, and that's huge, right? Because there's a lot of people that through these recessions they lost their jobs, they were laid off, and then they started their own business. In 2020, I think there was a ton of new businesses that came out of nothing because people were just sitting at home, and they just had to come up with a new business themselves to make ends meet, pay their bills. So a lot of new self-employed people came out of this, right, from 2020 alone, right? So let's say you went through that transition and you're no longer able to refinance through the conventional products out there using W-2s and pay stubs. Now you can 1099. You can also cash out rate and term financing. But of course, your loan to value limits shall be the same. Like for instance, here in Texas, I think the maximum that you can cash out of a house is 80%. So you got to have plenty of equity in your home, right? For you to be able to do that. Okay. But yeah, it's available. We can just give us a call, reach out to me, and we'll figure it out if you'll fit in that program. Okay. 2 years seasonings for foreclosure, short sale, bankruptcy, or deed in lieu. Oh my God. Okay, so check it out. Check it out. Let's just figure this out. Just give you an example real quick. Okay. Since the last depression, Obama is the president. There was a real estate bubble that burst. A lot of people lost their jobs, never got their jobs back. They lost their homes in that process. They foreclosed. They had a short sale. Okay. It's now been definitely more than 2 years, right? But since then, you haven't gone back to the workforce and become an employee of somebody. You, like I said, you are a 1099 self-employed 1099 income earner, and like maybe even like guys install ACs or something, right? I think those guys can be 1099 as well. You're a technician, you're licensed, or a plumber, and the company just pays you with 1099s. Okay, they just write your check here, done. It's your money, gross. You'll deal with your own taxes. That's the kind of scenario we're talking about. But going back here real quick. So if you went through that, you lost the house, you lost your job, now you're self-employed, you haven't been able to purchase a home since, because one, you had foreclosures in your history, or you had a short sale where you bankrupt. But now you can. Now you can. So all you required is to have 2 years seasoning from those life events that you lost your home. Yeah, absolutely. Or even let me give you another scenario that this is going to come up right now, guys. This is coming up right now. All right. It's coming up right now. There's a lot of people that put their loans, their mortgages in forbearances. Those are people that eventually they're going to get in trouble there, man. They're going to be in trouble. I hope not. But this is what we're seeing. We're seeing people that were in forbearances not being able to catch up and pay off. I mean, the bank at one point or the other, they're going to come back and say, hey, look, I can't put this on the back of the principal. I need the money right now. All these 12 months, 24 months that you haven't paid. Yeah, maybe I can modify you. I can modify your loan, right? That's really the first action I think these banks are going to take, because remember, they learned their lesson from the last recession. They didn't know what to do, so they were just simply foreclosing. And then they started doing the short sale. I'm talking about 2007, 2006, 2007, 2008, 2009. Talking about then. And we saw so many short sales, and they're terrible homes to buy in the market. But it saves you from having a foreclosure in your name, right? But anyway, so you end up doing that. But right now, I think the first wave of these forbearances are going to be in loan modifications. But here, hold on a second. So they're going to give you the option. They're going to give you an option to modify your loan, okay? But in order for them to modify your loan, what they're going to do is ask you for your income documentations. They're going to try to re-qualify you, basically. They're going to see what your debt to income is again. They're going to ask for your W-2s and pay stubs. And what if since you went in forbearance, you changed jobs, now you've been working 1099 for a year or two since you've done your first forbearance. And now you're trying to kind of save yourself and save your house again. Here, we can refinance your house. We can refinance your house. Hopefully, since this whole COVID thing, the low inventory prices have gone up like dramatically, has gone up. So now you have more equity. You're sitting on equity. So that may be what you need, as long as we can meet these loan to values here. So in other words, if you refinance your home, the new loan amount needs to be within 90% of the value of today's value if you're 700 credit score. Or your new loan amount that's going to pay off your forbearance. Let's make it clear. Your new loan amount that's going to pay off your forbearance, okay, needs to be 80% of the today's market value in order for you to qualify for this one. So yes, I'm trying to be as clear as possible, but this may be one of the solutions if you don't qualify for the modification that bank will eventually offer you when it's like, okay, too late. Either you modify or we're foreclosing on you. It's going to happen to a lot of people. Like more than 5 million people are in trouble right now with forbearances accounts. I know my neighbors over here probably have it. Yeah. And we don't want you guys to lose your homes. So we have products. Call me right now. Call me right now. Call me right now if you have a forbearance. Let's figure it out how to get that forbearance paid off. Let's figure out a way to refinance and get you restarted into a new loan before these late payments that you're making become late payments and they damage your credit. And then it's too late. Yeah. So while you are in forbearance right now, guys, it's not affecting your credit yet. But the moment they claim it like, okay, you're over, it expired, we're not going to extend the forbearance again, the first 30 days after that, boom, got a mortgage late. And that's the problem. So call me before you make that first late payment. Listen to me very carefully. Call me, okay? But anyways, yeah, I want to help you. Also available for non-warrantable condos allowed. So that's, man, I mean, it's just so broad. It's like we're not leaving anything behind here with these products. So there you are, man. I mean, investors, cash flow. I mean, I know there are a few of you right now thinking about it. You don't have to show income. All you got to come up with is the down payment. That's it. If you're cash rich for a down payment, you can qualify for these products. And you know what? I'm going to tell you, I'm going to try to bring more of these crazy products as we go. But before I tell you about it, here's my number. These are my office numbers right here. These are my office numbers. I try to give my cell phone number. Oh my God, my phone blown up. Okay, which is good, but it wasn't customers that called. I got more spam calls than you can imagine. So these are my office phone numbers. Yes, this is a businesses that you can find. These are the office phone numbers of these businesses. And all you got to do is ask for me. or anyone else in that office. I'm sure that anyone that works for the companies that I'm with right now, they're all more than capable of helping you get the home of your dreams or fulfill that investment needs that you have. Um, yeah, anyone in my office, but I'll be very more happy if you ask for me. Okay, well, let me unshare the screen here real quick and go back to you face to face. All right, so again, I'm going to try to do more of this, get more excitements out there, because I do have all the products out there that, to serve. Like I said, I have products to serve almost every single need and situation. Okay. Unfortunately, there are definitely those that maybe I might not be able to help because they just didn't fit in the guidelines, and I don't control the guidelines. If I could, I would, right? But I can't, right? So I have to work with these guidelines that are given to me by the banks. And again, all of them are based in risk and whatnot, right? So I am very excited by these two that I've shown you today. So if you're just watching this one now, this is part two of the today's live show. One I gave it earlier at noon, and now I'm about to finish the second part of this video. And these two products, please tell your friends, tell your family. I'm telling you, ask me how I can fit these products in your scenario. Let's get you qualified. It is that easy, super quick. It'll take me maybe 5 hours to get all it together, give you an estimate of what's going to look like. Okay. Money out of pocket, interest rate and payments and such. And then we can also look for homes. Get the home that you're looking for to rent. The market is hot. Low inventory in some areas, but the market is hot. I'm seeing more inventory coming in, more and more inventory coming in. And this may be somewhat of an opportunity for you to get in while the rates are low. Again, remember, if the rates go up for the conventional loans, these rates are going to likely be higher too, and then just become more expensive, and they might go away because it is no longer attractive. So those things could happen. So take advantage while you can. Don't leave it for tomorrow. Okay. So again, my number is 832-912-4454. Ask for me. Or my mortgage office is 832-345-5450, and ask for me again. And I'm always happy to take calls in the middle of the programs. I'm always happy to answer any questions, get you all the answers that you deserve. Again, I mentioned on the earlier video, if you have a life event, if you have a personal issue, something that I could help you with, by all means, let me know. I am here for you. I want you to also please consider supporting me by subscribing to my channel, by liking it, putting your thumbs up, and letting me know if I can do anything else to make this show even better for you. Okay, so again, every Wednesday at noon, I bring you your live real estate talk show to make this an open platform where you and I can interact, and I can answer all your real estate needs or anything else that you think you should ask me, and I might be able to answer. Well, at least you get my opinion, right? I mean, that's all I have really at the end of the day. But you're always welcome. Always welcome. Please come on in next time you see me, or even if you don't see me live, you can post your questions for later. I'll answer them as I go. I look at my videos all the time. So if a new comment come in, I'm going to answer it. Okay. Well, thank you so much once again. I hope you enjoyed these two videos. Again, call me.